Hey everyone, and welcome to the channel. So here on this portfolio in our channel, what we're doing is just kind of sharing our investing journey. Nothing too crazy, nothing too chaotic. I just like to kind of show the portfolio from time to time, how it's doing, and also kind of go over our dividends that we made right now over the last 6 months of the year. Now, granted, some of the months haven't passed yet, but like I can actually calculate it based off of where we're at. So I just kind of want to show you what the first half of 2024 is looking like. Currently, our portfolio is sitting at a whopping $315,748.34. By far the highest dollar amount that we've had on screen so far. It's been a little bit of time since our last update, so it's really nice to see how the portfolio has been doing. Funny enough, I actually tend to slow down on how much I show my portfolio when it's doing well, and then when it's doing terrible, I end up making a video pretty much every single week. So we can see right over here, obviously, when we just look at the last day, we had a negative gain on our account by $410, but let's go through the week. So right now we're sitting at $363 in losses over the last week. But if we go to the month, here we're sitting pretty with a 4.89% money-weighted return, which is a total market gain of $11,202. You can still see that on this account, I am doing a investment still in the market even when it is doing really well. Generally speaking though, I do end up investing my money in the portfolio or in the stocks that are doing much lower than the rest. So I'll show you kind of how I figure that out and like which ones to invest in. But let's kind of keep going down and seeing how we're doing. By the way, in the last month, our earned dividends are almost $200. It's such a beautiful sight to see. And then you can see right over here, if we go to the 3 months, we have a market gain of $14,444. Definitely was putting in quite a bit more earlier in the year, and I just cut that off. That's great. 34,000. But you can see our earned dividends right over here is $332. Let's go to the year to date. Just a little extra time there. You can see the market gains is about 27,767. So we started off 2024 at $250,000, which was just incredible to hit. That was a huge milestone for us. Obviously, the next big one is going to be, 500,000. So, hopefully with, dividends increasing, with, the market going up over time, we're going to see that number hit faster than it took us to even get to a quarter. That would be a really nice sight to see. So let's go ahead and go to the 1 year and see how we did. Obviously, over the last year has been really nice. We gained over $77,000. In this, you can see over the last year, we've earned $2,126. I'll show you in a breakdown how that kind of broke down over the months. And let's go to our all-time, because this is always really important to me. So you can see in our all-time, we have a total market gain of $91,145 and total dividends $4,241. So first off, I've made pretty much half of my dividends, if not more, just in the last year, which is just a really powerful way to explain to people that compounding is so important when it comes to investing, as well as focusing on some dividends as well. So for us in this portfolio, it's going to be amazing that, one day we're going to have 4,000 in a year, let alone in the full lifetime of our overall portfolio, because you can see the overall portfolio here. And I love to show this. So we started out our account. You can see January, I think it was technically the 23rd, but by the time the money went in, it was the 24th. So you can see right over here, we put in $100. That's what we started with. And we did like $10, $20 every single week. Started off with a really small amount. Once we got more comfortable, we started increasing the amount. And then when the market was doing pretty poorly in 2022, we were investing pretty heavily still. And a lot of that is now coming to fruition as far as gains, which has been really, really nice for the overall account on this total. Now, like I mentioned, so we are named Dividend Dentist. Funny enough, some of the stocks that we held in this portfolio were actually not paying out dividends. And one of the things, if you ever go back and watch some old videos, I would always say, well, eventually either A, I can sell these companies and buy into dividend companies once I want to really heavily focus on dividends, or these companies will eventually go through the process of paying out dividends. And sure enough, right over here, 2 of my companies, we have Meta and Google, this year had announced that they are going to start paying out dividends, which is incredible. It's an amazing thing. Now, is it a lot? No. While also at the same time, where I'm getting in and, if they keep increasing their dividends over the years, my yield on cost is going to be outrageous. It's going to be incredible. So I'm really excited for that because obviously we still have Amazon, which probably maybe we'll do it in the next couple of years, which would be great. If not, not really caring about that. I know they don't really still have a big focus on it, but we'll see if that changes in the future. At some point, back in, I think it was 2012 or 2013, Apple, started paying out a dividend and still was an amazing growth company. So you can pay out a dividend and still be a growth company. That doesn't mean that you're done being a growth company and turn into a value. So for us, really excited about that. That just means we're going to get paid out, obviously, more in dividends over the years. And again, those dividend increases. So I want to show you a little bit about kind of where I decide to put some of the money, especially right now with the market being so high. But before I do that, if you are curious on this platform, this is M1 Finance. I will have a link for them in the show notes down below, or if I remember during my edit, putting in a QR code here on screen for you. You can either scan it with your phone, or if you're using your phone to watch this, screenshot this part. You'll get the QR code to be able to go and sign up later. You get a nice little bonus for using our link. So I'm going to go and head over to Seeking Alpha. So this is where I pretty much get a lot of my data from. This is where I read news articles, and this is honestly my favorite way to quickly analyze a lot of things from not just my portfolio, but other companies that I'm looking into as well too. I do also have a link for this one as well if you want to check them out. Again, it'll be in the show notes or possibly on screen for you. You get a nice discount if you want to go ahead and check them out for the first year. It's a really, really good price. Would recommend it, honestly, to give it a shot. So what I like to do is right here, you can see I have my M1 Finance account. These are all of my holdings if you want to see what they are. I also have videos explaining all the different holdings I have. So what I really like to do is in this section here, I can see my 52-week range. Now this isn't like the end-all be-all of like deciding which companies I'm currently investing in, even when some of them are at their 52-week highs. But what I really like to do is honestly, when I can, draw pretty much a line right down the middle. That's probably not down the middle, but close to the middle, and say, okay, who's closest to the left side of this line? And those are the companies I'm going to look back into with, if their recent earnings, looking at some of the news articles that are kind of associated with those companies to see, all right, are we still on the same path? Is the objective of why we're investing in these companies still there? And if so, that's when we continue to keep on investing. So you can see, for example, right now, we have SoFi that's pretty much underneath that line, Home Depot that's pretty much on the line, as well as Airbnb is also close to that line So those are the three right now that I've been investing in the most, just because that's where, they've kind of fallen down, where the rest of these are at their 52-week highs or very close to their 52-week highs. Not saying I can't buy while they're at their highs. It is much harder for me. I actually have a harder time buying at 52-week highs than I do at 52-week lows. I love buying on a discount. And again, that's why I think I make more videos during that time period than when the portfolio is doing really well. So that's how I pretty much make that decision to start looking back into these companies. And what I love about Seeking Alpha is I can scroll down here, and these are all my companies that I have in this portfolio, pretty much with news articles. I can go to analysis. I can just break down it with the news, any warnings, any transcripts from the quarterly reports. Or if I really wanted to, I can go into, like, let's say Home Depot by itself. And then same thing, that was all just curated for Home Depot information. So then this way I can kind of be looking, okay, like what's the PE ratio? Are things looking healthy? Are we in a good position to be investing more while it's at this point? Or has it gone down in price as far as the stock price because of its last earnings or some news coming out because of what they've been doing or how they've been running their company? So if things are looking solid for me in here, looking at the valuation and their earnings, and things are looking, again, where they're at, if the PE ratio is to my liking, then I will go ahead and continue to do more purchases on these companies while they're underneath their 52 weeks, or at least, for like Home Depot, it's kind of mid-range in its 52 weeks. So this could be a company where I want to continue to do purchases because I still see, what they're doing and how they're running their business as a means for me to continue to do that investment. Now, of course, if things are changing, if management's changed, if the direction of the company is going in a way that I don't like it, or for me, especially with like Home Depot, their debt keeps going up sometimes, and it's not a great thing for me, then I become a little bit more reluctant to do more purchases on those companies as well too. So that's me using Seeking Alpha to be able to get that information, to be able to go back in here and do my purchases. As you can see, when we go back to the month, I'm still putting in, this last month I put in about 1,300 because we are hitting those all-time highs for a lot of the companies, and so it's getting a little bit tougher to be investing in these companies because, again, it's not my specialty to be buying at these peaks as well. So from here, I want to go and take you to my dividends. So I'm going to zoom in a little bit, but I want to just show you kind of from a further out point of view. These are just my M1 Finance dividends. I also have my retirement dividends that I account for as well. So we'll break those down in a future video as well. I did make this. If you do want a copy of this, you can check out the link in the show notes for you. So that way, I clicked some random buttons here. Hold on. So that way you can get a copy of this. You just sign up for my newsletter. I bombard you with a million emails. Just kidding. I think I send out like 2 emails a month. And so let's kind of just break this down. You can see, so at the beginning of this year for 2024, I had a really nice dividend payout thanks to Costco. I made a video about it. If you'd like to check it out, you can. And they paid me a really, really good amount for holding those dividends because it was a special dividend. So that's a little offshoot right there because you could see in the following first month of the next quarter, I didn't have any payout actually. So usually the first month of a quarter, I don't get paid out, which is a little sad, but I'm not trying to invest in companies that pay out in those months just to get paid out because that would not be a great way to invest. Although a part of me does want to do that, but I digress. I try not to overthink that because for me, I like to see all the numbers grow. So you can see over here, in February 2024, we made $254.38, which was a huge increase from the from last year. And then in March, we made $336.64, which was a pretty massive jump from the $181 from the year prior. Now, I also break them down in the quarters here towards the bottom. So you can see in 2023, we made $325 pretty much, and we made almost $825 in this quarter this year, which is just massive growth. And again, some of that was with the special dividend, but even if you take out the special dividend, we still made a really good amount, but I don't want to disqualify that because I chose to invest in Costco in knowing that I am getting those special dividends every couple of years, not banking on them, but the possibility of that happening is pretty high. So then again, we go into April with $0 because I got none that payout during those months. But you can see here in May, we actually went down from the middle of the month from February because we did sell out of like Texas Instrument. I believe that was the main culprit. So we dropped down to $199.62, but it was still a fairly large increase from the year prior. So that was really nice because last year we made $130. This year we made nearly $200. And then you can see here in June, because we also are getting paid out from Google and Meta in this month, I believe. Right over here, we're making, and this is still being added up because if I buy a few more times throughout this next month, this might go up, but this is around what we're going to have, and I'll do a full video when we're done with this second quarter. But we're looking at $411.48, which is a really nice increase from March, and obviously we're comparing those because of the last month in those quarters. And you can see here, pretty much we doubled what we made from last year, which is just such an incredible thing to see, and like the compounding effect of our dividends having an impact on us. Now, in case you're asking or wondering, yes, all of these dividends are getting put right back into the portfolio. I personally like to put them back into the companies that are performing the lowest at the moment, so long as they're, still companies I want to invest in. And so for me, I don't personally always pay back into the companies that paid out those dividends because M1 Finance allows me to still kind of control it wherever I want it to go. And when I do that, I feel like I get more value out of those dollars rather than investing back into a company. Because if, for example, let's say, Meta pays me their 50 cents per share and then Meta's at 52-week highs, it's not going to be as advantageous than maybe putting it towards Home Depot, who is, mid-range of their 52-week highs, and I can get a better value for my dollar investing in them. So you can see here, Q2 of this year, we're now estimated to be around $611. Last year, we were at $329. So it is looking really, really solid. And thanks to that special dividend, if I can move my screen here a little bit, I'm going to slide this down. I'm going to show you where we're at right now. And there's a couple different numbers here as well too, so I'll kind of explain them. Don't worry about this number. This is usually when I compare month over month, but I didn't change that before this video, so shame on me. So you can see here, for now, for the first half of 2024, we're sitting at $1,435.86. Again, this might change a little bit just by a couple bucks by the end of June when we hit all our ex-dividend dates. And you could see last year in total, we made $1,545. So we nearly by $110 are already matching what we made all of last year. Now, I don't know about you, but that is seeing compounding interest really taking effect here, that we're gaining so much momentum for this. And so you can see here, we're just down about 7% to get to even, and then just growth from there, because last year we grew about 63%. And I believe over time, we're going to keep going down in overall year-to-year growth. While, those percentages, dollar amounts are going to get bigger, even with the percentages going down, which is, I think, a beautiful thing. I also like to kind of break this down too. So I put the current year, I divide that by 6 months, just because I like to kind of break this down. And you can see here, I have a per hour on how much I make. Now, this is not including just like a workday out, like 8 hours. This is including a 24 hours, 7 days a week kind of scenario, because when I focus on dividends, for when I get to 45 years old, my goal is, if I wanted to live off of these dividends. And so what I want to kind of see from my perspective is, okay, how much am I making per hour when I'm awake, when I'm asleep, when I'm traveling, when I'm on vacation, when I am also working, all of these different situations. So for me, I am currently making 33 cents an hour, day and night, working, sleeping, traveling, all those things. And I think that's actually a beautiful thing. And obviously this is going to continue to go up over time for me as well too. As we're increasing the dividends, as we're increasing all of this stuff as well. So yeah, I'm actually in the view only section, so I can actually change some of these numbers, because I was just going to plug in some different numbers to show how this changes depending on what our income is and how many months have passed. Because you can see year to date, we were calculating for just the first 6 months on here. So any of the things that we talked about here today, like M1 Finance or Seeking Alpha, or even my dividend income tracker, all of those resources are going to be in the show notes down below. Utilizing those links do help me out to make more free content just like this on a regular basis. So that does help out a lot, and we do appreciate that. And speaking of making more free content, I do have another video up here on screen for you if you want to just keep watching and learning when it comes to growing your account and your investment.